Hello and welcome. My name is Benoit Podiquet. I'm the founder and one of the portfolio managers here at Exponent Investment Management, and you're watching the first quarter 2024 market recap. When we look at the performance of the return for the index, the performance for fully diversified investors, they effectively experience a year's worth of positive performance in 3 months. So if we go down the list here, the Canadian market for the first quarters was nearly 6% over double digits over in down in the US in Canadian dollar terms. Europe turned in a really good performance, and the emerging markets put in a decent performance. So these indices, we'd like to remind investors that the immutable law of mean reversion should be coming into effect at some point, as not all values move up in a straight line. Now, the surprise for this quarter was oil prices up 16% and gold prices also putting in a significant positive performance, up 8%. And interest rates were higher, meaning bond investors saw a negative return. And we're looking at, for Government of Canada bonds, we're looking for a one-year number. We're looking at 4.7%, and but the yield curve is still inverted, meaning as you go out in time, you're still earning a less interest. What you can see here is the S&P TSX. So the Canadian market's going back 5 years, so going back to 2019. So what you see here is the downdraft of COVID. And you can see here that we're barely making an all-time high at 22,000, north of 22,000. And the markets have basically been trading in this box for a very long period of time, going back to basically the early part of 2021. And so this type of market is really where the dividend approach really shines, where the income from in this case Canadian stocks in terms of dividend income really represent a large part of your total return, if you will. So these sideways markets really benefit dividend investors because the dividends are coming regardless of what's going on in the market in terms of price appreciation. When we look at what drove the markets in terms of the different points, so we can see here that the market was up 5, almost 6% for the quarter. And what we like to see here is this broadly diversified in terms of the leaders. So it's not like we're going to see in a minute the U.S. market where it's just a few names that are making up the bulk of the return. In Canada, we're seeing this is a healthy market. This is what it looks like, where the performance is broadly spread out over, in this case, over the top 20 names. What's also interesting is some sectors, like telecom, are completely being ignored, meaning they're on the right-hand side of the chart, which is not where you want to be. So things like BCE, TELUS had a really tough quarter, down substantially, 9%, 5%, as you can see here. And so those are significant downdrafts for stocks that are not known to be very volatile. And finally, what's also interesting is stock picking really matters. In other words, within the same sector, you will see something like, Scotiabank, which had a rough 2023, make it on in terms of the leaders. And then we were seeing TD here as the one of the laggards. And so you're seeing this sort of another example here would be OpenText, which is in the technology space in Canada, have turned in a substantially negative return of minus 5.5%, while another technology name is up 12%. And so the stock picking in Canada really, really paid dividends this quarter. What you can see here is the S&P 500, so the 500 largest companies trading in the US. This is the index value chart, if you will, going back to 2019, so the past 5 years. So we're definitely at an all-time high here in the US, with the index trading at nearly 5,300. We can see here the downdraft for the COVID that happened in March of 2020. And basically, again, like the Canadian market that I showed you a little earlier, the market was really trading in this box going back to the beginning of the year. Um, Between this 35 to 4,500, 4,700 level. I mean, it's quite a big box, but nonetheless, investors really had to stay patient, stay invested in order to participate in this all-time high. And so we had a few false starts, a lot of volatility, and the markets kind of bottomed out in September of 2022, rallied, gave up basically half their gains, and then have rallied again. So again, that's why we're calling for some caution in terms of mean reversion, pullbacks, whatever you want to call it. But you've got to stay invested for a long period of time. And a lot of these new highs always follow long periods of sort of sideways activity. Again, a case for a dividend investing in this case, where at least even if the markets are going sideways or trading within the same box or rectangle, the dividend income is coming in. And what I'd like to show here is an interesting chart. Is basically the Magnificent Seven. So I've been on this theme for a while now, where the top 7 stocks, they used to be called under another acronym, but a lot of the names of the stocks have changed. But effectively, the large technology names have been carrying the index for quite a while now. But what's interesting is we still have NVIDIA making all-time highs. It's up 70% in the past 60 days. So let's call it the first 60 trading days or the first quarter effectively. And other names like Microsoft, Meta, and Alphabet still going strong, and Amazon, let's not forget Amazon. Well, what's interesting is we're seeing Tesla and Apple's been out of the headlines for the better part of 6 months now. And so it's important to remember that, as part of this healthy distribution of returns, it's entirely, these leaders are often referred to as the generals. And so oftentimes you'll read or hear about market pundits calling about what are the generals doing. And in this case, 2 of the 7 generals that were the market leaders are starting to fade. Now, some people would say this is quite of a bearish phenomenon. We're not necessarily seeing this as a bearish phenomenon. It's just that basically we're seeing a rotation in leadership, which is a healthy situation. Now, diversification or diversification, and I know diversification is not a word, but I'd like to check in on these types of phenomenon. In other words, what we have here are 4 ETFs and their returns for the past 61 trading days or 60 days of trading. So what we're looking at is the S&P 500 ETF. And as we know, the S&P 500 is market-based weighted. In other words, it's constructed where the largest companies by market value make up the largest weight of the index, otherwise known as market cap weighted. Or you can take the same 500 names and equal weight them. That's what the EW stands for. That's another ETF. And so it gives you an idea if the returns are broadly diversified or if they're really focused. So we call it, and that's what an illustration of that is if there's a market difference between the equal weighted and the market cap weighted index. So we can see here for the quarter, the S&P 500, the index total return is 11.35, and the equal weighted is less at 7.75. So getting better, but still not there. Whereas in Canada, the difference between market cap weighted and sort of equal weighted is actually the diversification actually helped in this case because the rally was actually so broad. So someone suggested that I should present some interesting tools or stats that we see every quarter. And so here's the first attempt or the first slide of this idea. And please give us some feedback if you like this. So as part of the quarterly reviews that we were doing and the research we were doing, came across this interesting fact that over 30,000 mentions of AI on earnings calls. Now, there's not that many companies that report. So AI is certainly on the lips of every corporate executive. In fact, this presentation is being helped by the use of ChatGPT, and which is the AI tool we use. The presentation used to take weeks to prepare, and it's prepared and delivered in about 20% of that time, thanks to the use of AI. So it's certainly a good thing, but is it worth 30,000 mentions in quarterly calls? That's really a question. So fortunately, Google makes this really neat tool called Google Trends that everyone has access to. And what I did is I just searched in terms of, it tracks the searches on the Google search box that we all know and use. And you can see that basically there's a distinct line where AI usage, and you can't really see the date here very well, but it's effectively the middle of 2022. So this is about a year. And the AI search, just the trend, just if you punch in AI on the search tool, it's really has grown tremendously and is now kind of on a new plateau. And it made me think, it's sort of, and now everything that's, any stock that has any sort of mention of AI relation, investors seem to be bamboozled over it, or not bamboozled, but they fall in love with it. So here we go. And it reminded me of, in Canada, in the whole cannabis trade or stock craze back in 2018, you could see sort of a big spike in cannabis search, and then have the whole thing fizzle out years beyond. So you can run this trick with things like EVs or all sorts of different search strings to give you an idea of what is real, what is in vogue, and what may go away. Cannabis hasn't gone away, but the craze and the infatuation on the part of the public certainly has. So that's it. That's kind of the interesting statistic that I wanted to share with you this quarter. Once again, thank you very much for watching. And if you have any questions or comments, we'd love to hear from you at this email address. I'm Benoit Poliquin for Exponent Investment Management. Thank you for watching.